Okay, so after last week, we were able to see, or during last week, that what kind of company should we analyze. It's a really simple company, so they are making rockets. We don't care much about engineering issues. We care about that we have to build something unique. So that's why, but still we are economists, so what we are interested in is how much money can we earn on this job. So this is not about for all the mankind, this is not about for happiness, this is about earning money. So at the end of the day, we have to look for that which strategy has the highest potential to create most of or higher value added for shareholders, who are practically us, because in later definitions we will see that we have to invest in this company, theoretically, obviously, and then we can see that what happens with our investment after 5 years, at least if we are implementing our strategy. So today the menu is that we have to design the product. Then we have to determine that what kind of profit and loss statement do we have, what kind of balance sheet do we have. So if we are converting all the engineering stuff to finance, then what are the consequences? And then next week we will continue that. Okay, after that we will calibrate pricing. So what will be the fair value of the share price with discounted cash flow model, and then we will do later analytical steps to highlight the sensitivity of the strategy on many different external shocks. So first of all, we have to do the design. In this case, I would like to follow a parallel path. So first of all, I will create a scenario which is the default scenario. So what is the state or conditions, what are the conditions of Ariane space right now? So without any reusability, how desperately useless they are. Because in this case, if we are just building their existing hardware, then we can model their finances, and then at the end of the day we will see the value of the company. So this will be the default state, and then I will build my own strategy, which will obviously mimic SpaceX, because this is the objective here. So at least my objective. Obviously this is just one strategy, so hopefully there is no best strategy among the different options, because I try to make as much choices for you as possible. So that's why you can choose or do whatever you want. This is for playing with the case studies. This is not about who can make the highest profit. Obviously this will be fun, but okay, so it's not completely the end game here. Right now we should see that can we do it better than the actual taxpayer using corporate entity what we have in Europe. And definitely we can, because we are economists, not politicians. So let's see what we have here. So first of all, in the case of CoSpace, we have to open the second profit and loss statement balance sheet folder. We have this case study assignment from the last year. We have the case study sample solution from last year. Obviously, this one will be quite useless. Right now, I don't delete it because you can download the sample solution Excel, because after that we will be playing with that one. I will upload the modified version of it on CoSpace later on, so you can find all today's files here at the end of the class or during the class as well. Yeah, so what do we have? There is steps of the case study. What should we do? There is also a table for the main components, so all the engines and related stuff located here. So practically everything what we need for design, or mostly what we need for design. And then there is the product sheet. This is where we have to plan. Practically, this is where we have to plan the vehicle. So what kind of engines do you want to use? This is the name. The number, how many do we need? is also located somewhere in the table. It's not located in the table. Yeah, there is. Required number for, the vehicle. So this is what we can see, that this is 3. Obviously, we have to put, in this case, 2 on the bottom, so the first stage, and then 1 on the top, so on the second stage, and then this will fly happily. Also, the price is determined by this table, so if we are going downwards, and this is one engine costs 10 million euros. Right now we don't have exchange rate, so 1-to-1 between euro and US dollar. Later on we will complicate this further. So this is 20. Also you can see that this is referring. We are working with Excel, so we are trying to refer to different sheets as much as possible because this is easier. Fuel type, hydrogen, because it's written by the table. Again, that it has this fuel type. And also what kind of rocket body do we have? So the hull of the body, it's aluminum lithium alloy because this is cheap, and also because this is used by Arianespace. We know that 75% of the actual value of the rocket is related to the first stage, so this is educated guess based on different interviews within the industry. So also I collected, I don't know where, but collected many data sources and compiled them together, so we can say that at this point it's 18 million euro is to manufacture, then 75% is certain. So practically this is also coming from the case study, from the PPT, what you were able to see that, okay, we have to multiply this number here. We can go for carbon fiber as well, just that one is way more expensive and I would like to keep it as cheap as possible. Second stage, engine can be different if you want. This is easy to have Vulcan in the second stage as well, 1, and this will cost only 20. We can combine different engines all together, so we don't care about that one, just, okay, I kept it simple. Aluminium, again, is the second stage, and then the price is lower. Then also we have total fuel need, so obviously if we have fuel from hydrogen, then there is somewhere the tonnage. Yeah, fuel requirement for the Vulcan engine, this requires 24. Maybe I will zoom in. So this requires 24 tonnage of hydrogen. That's why hydrogen engines are really efficient in case of useful tonnage, because we can see that at the same time from kerosene, Merlin 1D requires 150. And obviously 150 is bigger than 24. The problem is that hydrogen is corrosive, it's leaking, and you have to keep it at minus 250 Celsius, which is quite frosty. So despite its benefits, it has many weaknesses. So I don't recommend this one. Bless you. And actually the price is absolutely negligible. So the case study defined that, okay, this will be the price of the fuel in case of hydrogen, okay, and then we can see this is the unit price, this is the actual price in million euros. The fairing, the top of the rocket, which will be deployed once they are leaving the atmosphere, this is what is saving the satellite or the cargo from the atmospheric shocks. So we are just dropping away one of this, but this takes also 7 million euros. SpaceX recovers this, we don't care, we can just drop it into the ocean because animal species like this when they have just some plastic pollution around them. And at the end of the day, we have this sum function here, which sums everything together. So this is the manufacturing price. So again, this is just how much money should we spend on the manufacturing of everything and fueling them up. Then, this is where we have the recoverable cost. So right now we can see that if we are just recovering the first stage, then engine and the hull will be recovered. We don't have refurbishing fees because we have no idea what is assigned to them. Unfortunately, even SpaceX is not disclosing anything, even if they have already using this technology for 9 years now. So yeah, they don't have anything here. But the remaining parts of the second stage, the fuel and obviously the fairing, will be lost for us, so we are not able to recover this one. Bless you. So we cannot recover. And originally, SpaceX was assuming that so they can use one first stage 10 times, and after that they have to drop it away. Nowadays we can see that the recorder is maybe 36 or 37 reflights. So this can go for longer. Anyway, this is easier to calculate with 10 launches. So we are reusing it 9 times, and then we can take it to pieces and selling the scrap metal for 0. So at the end of the day, we can say that, okay, expected costs. So 9 times this one, and 9 times this one, and also this one here will be the expenditure, and after that we can take an average. Then we have to set the margin, and at the end of the day, this is what we have as a price. And from the case study, we had some ideas that what will happen with the launch numbers. Unfortunately, right now, this is cleared out. So let's reopen the PPT from last week because we have to fill in the details. Yeah. So this is the potential market. So if we are too expensive, so if we are above 80 million, right now they are selling the rockets, so the actual Ariane 4, somewhere around or between 80 to 100 million euros. It depends on the configuration. So we can say that there is a reason why there is not much demand for the asset, actually. 3. So let's look forward to this time period. And then we can see that, okay, this can be a potential. So this is just an incentive or positive feedback that if we can go to cheaper prices, then we have higher orders, and we can be really close to SpaceX at the end of the day in case of, because we have only one launch pad, so we are limited. We cannot launch more than once in a week because this still takes time to prepare everything and move stuff. After that, here we have the engine explosion probability. This is again coming from the database, so actually how many times this engine in real life was launched and how many times it was exploding. So this is why we have this 4.27%. And this is for each year, so we don't care about, there is no learning curve. But still, this is considered as a reliable one. Usually engines are exploding at the first several launches. After that, they became much more reliable. Then we have the stage explosion probability. This is coming from rocket body here. So if I'm building from aluminium, then we have this 5, 4, 4, 3. So it's 5, 4, 3, 2, 1%. Here it was really hard to create exact mathematics, so that's why it's stupid. In case of carbon composites, at the beginning it will be exploding, after that it's not, because it has high rigidity. So this is rigid material, if we have the experience to work with them. So there is a learning curve. And then, this is crucial mathematics. So, to have a successful mission, and in case it doesn't matter, so if we have any mission critical issues, so obviously if engines are exploding, then the vehicle will explode. If the rocket body explodes, then the whole vehicle will explode. So that's why we have to multiply these numbers. So 1 minus this probability multiplied by 1 minus this probability. In any risk management, if we have critical stuff, we have to always use multiplication of the different probabilities, because if one is set to 0, then the whole stuff will set to 0. It can be really misleading if people are just adding them together. Because in this case, what we can see that, if we are losing one, then still the other one will compensate. This is not the case here. But just, this is, again, much more general than only focusing on rockets. It's on about any systems when one component is crucial. Then, so this is our ability, obviously, so if we are losing the cargo because of unwanted or unfortunate explosion, then we don't get money. So that's why this is the probability of how can we generate revenues. Then, can we land the first stage? For our business partners, this is not so relevant. So this is our way to cut costs. But at the end of the day, we can see that we have the learning curve. This learning curve is again coming from the main component sheet from here. Why these numbers? Because that was the exact probabilities of SpaceX able to land propulsively in the first 4 years. After that, it became quite a constant one. So that's why this is constant for them, because for this engine, for this configuration has been solved, but they still have to go through the learning here. And it's quite good because in the case of Blue Origin, from 2 launches they were able to land once, so actually still the 50% from this really small sample is still close to the 67. So nice. And so that's why the probability of first stage reuse will be taking account that, okay, we were able to go up successfully, then we have to reduce it by exploding. Then what remains is this 30%, and this will increase. So at the beginning, we have high chance for explosion, we are not able to land, but once we learn how to do this stuff after the 3rd year, then we can avoid to manufacture first stages in many cases. So that's why also we are highly motivated to have most of the launches in the 2nd period, once we solve this. Because this is how we can achieve the highest savings. Still, we need launches at the beginning, because this is how we are testing and iterating by explosions, but after that, this is how we can collect cash and generate cash at the end of the day. So we have to solve all the issues in the first 2 years, because otherwise we have to face troubles. Yeah. And we have the number of missions here, so we have to still define that which table do we want to use. And probabilities, so in this case we are just after that, these are just functions that, okay, how can we see that possible reusable first stages, and then at the end of the day, how many first stages we have to build. So this will determine that, okay, to satisfy 50 launches in the 5th year, we just have to build 2 first stages instead of 50. So this is where we can see the saving part. Yeah, so then we have the profit and loss statement here. We can see the number of sold products, so launches, unit price, which was set by the previous sheet, probability of gaining revenue, so going exploding upwards, or not going, sorry, exploding upwards, then collecting revenues, so multiplication of the number of launches, and the probability and the unit price where we are selling here. Then I left this here for research and development, but no, it's 0. So we don't want to mingle with this one. Probability of successful expenditure cut. So this is when we can land the first stage. Unit cost. This is the actual price. G10. Why are you this? This is wrong. This is not G10. Yeah, because everything is located here. This should be this number here, the 55. Oh, we identified our first block today. Nope. You are. I'm adding gray here because in this case we can see that that was in fault. That's why we have to check things before doing anything. So, how many first stages we have to build? This is automatically coming from here. We don't have to do any touches. How many second stages we have to build? In this case, it's really simple. How many missions do we have? This amount of missions, so we have to build something like this. Then, first stage is to build this. Also, this can be quite misleading because yeah, it's quite crude to say that 0.75% is for the first stage. Come on, guys, we can do it better. So, nope. Instead of focusing on unit cost, we can just say first stage. This is the price for the first stage. So, yep. Multiplied by 3, we have to manufacture 3 of them. This is the exact cost of the 3 of them. And then the second stage, this is the need for them. And this is everything else. So, Oh, okay, and I'll also fix you because you will wander off. Now I can roll it sideways. Yum. Okay, now it's nice. Cost of sold goods, so all this stuff together, we can say that, okay, these are the manufacturing needs. Obviously, these are the revenues, these are the cost of sold goods, so at the end of the day, we have to say that this number should be smaller than this number because this is how we can remain profitable. Then we have wages. It's really simple. Arianespace was disclosing in their sheet that how many people do we employ. So after that, we can see that they are employing, at that time of when I was creating the case study, at least they were employing 321 people. We have no idea who they are, how many engineers, how many HR people, and so on we have. So I just taking the gross average salary in France, multiply it by 2, and then we have the annual wages here. Obviously, we can provide them higher salaries, but this is not an HR class, so we don't care about wages. This is what we have. United Launch Alliance tried to remain competitive against SpaceX, so they started to cut wages, but come on, guys. We are a technology company, not some mining company when we are cutting wages to remain profitable. We have to invest into the future, not cutting wages. Come on. We have depreciation. It's really simple because, again, from the actual real-life company data, we can see that they have property, and in the case of the property, I just was using 20 years of depreciation, and okay, this is what we have as a depreciation. Then we have different margins. We have financial revenues, which is right now 0. Why do we have so many cash? Funding needed for Survivor. Right now, funding needed for Survivor is 0. We have to see what is happening here. Okay, we can see that already the cash reserve is minus 37 in this case. So let's give it 40 million. So we have to collect this somehow. And then we can go for break even. So financial revenues are 0. But hopefully if we are growing, then maybe we need 70. Oh, come on. 80. Okay, let's give 100. Now is okay, at least at 0. Just it means debt for us. In the first scenario, so we can see that okay, now we are in debt because I increased the numbers here. So this is always cross-referring. So if I'm adding additional funding, then it means the non-existing debt will become a bit more existing. Paid interest will come from real-life data. So interest on debt is right now is 4%. Later on we will define it better. Hedging expenditure. So when we were talking about foreign exchange risk management against US dollar, then this is where we will have numbers. Financial is when we have financial is we will see it. Then financial profit, this number here. And then pre-tax profit is this nice negative number. And then obviously until we don't have profitability, then we have this. Oh, this is not intelligent enough. Okay, so we have to teach it. So if this number is bigger than 0, then C4 will C30 will be equal. This is not MATLAB, sorry. So if this is bigger than 0, then we have to multiply this number with 0.25 was the corporate income tax. And otherwise, if you are not profitable, then this is 0. Yes, 25%. So this is a simple if function. Just in this case, we can say that until we are not profitable, we don't have to pay corporate income tax. And also we have to do the same thing here. Until we are not profitable, we are not able to pay dividend at all. So if we are profitable, then we can pay 20% of dividend, and otherwise 0. We can see that the numbers were not changing, so I did not mess up anything. And then we can see that the profit of the year is 33 million euros in losses in the first year. But after that, if we can do this reuse, then it will become higher and higher. Okay, in the case of the balance sheet, we can see that, okay, I had to create this cash reserve. U here. What is this? C30. Yes, obviously the loss of the year will reduce our cash reserve or add to the cash reserve. So here this 100 million euros is called the financial runway. So how much money do we have in the company to do all the modernization, to do all the changes, what we get from the investors at the beginning to survive until we are implementing. So for real life activities, so for example, at IT companies, when they are creating a startup for a project, this is much more crucial. So they are way more conservative. So usually you need at least a financial runway to survive for 2 years, 3 years in many cases. In many cases, investors will not provide you all the money immediately, like what we can see here, but you have to achieve milestones. And once you get the milestone, then the venture capital fund and the private equity fund or the other kind of investor will just provide the additional part of the equity of the investment, because in this case, this is how they can manage their risks. So this is overly simplified, but still the key concept is here that we need the financial runway. Right now it's 100 million, because in this case we can see that cash reserves at least are not turning negative. Still, this is absolutely not conservative, so this is quite an aggressive funding, because if we miss anything, if we are deviating anyhow from the business plan, then we go down. So, yeah. Not the best one, just good enough. Otherwise, the data is coming from the official balance sheet of the company, so we have some inventories, we have some investments, though we don't know into what, because it's not disclosed. We have some property, which is depreciating, and we have a lot of intangible goods. So Arianespace has a lot of IPs. Since it's undisclosed, it would be really hard to sell. But if you are checking the balance sheet, if you are checking the non-existing profitability of the company, we can see that mostly the value behind the company is actually the intellectual property rights. In many cases, what can happen that, for example, Arajet Rocketdyne, which was the supplier of engines for the US space programs from the beginning, so from the Mercury program until the end of the space shuttle programs. Right now, they are just purchased by defense tech company, but not for manufacturing anything, just only for the intellectual property rights, only for the patents, because it can be useful for their manufacturing, but they don't want to sell engines anymore. So, yeah, this is when things are completely going south and only the IPs are relevant at the end of the day. We have also some current liabilities. Other, I don't know what is this, so we will ignore it. We have some common equities. The major shareholders, in this case, in real life, they are Airbus and Safran Engines, so it's a French company and a European multinational company are keeping them afloat. That's the reason that also they have limited debt. So only this 2.5 million euros was the entire debt when the case study was created. So they are keeping them afloat, but not paying enough to develop. Unfortunately, this is the case. They have also some retained earnings. On paper, just no cash reserve. So if you are checking the cash reserve, this is also 2.4 million euros. That's also, after that, these retained earnings are quite stupid here, because we can see that this is absolutely not the case. Can I remove it? Yes, of course. Now they are much closer to each other. Yeah. Because total assets should be the same like total liabilities and shareholders' equity, and we can see that still they are far from each other, but this is not accounting class, so we don't care much about this. Yeah. For close calibration, what's relevant for us? Cash and property on the assets, and in the case of liabilities, practically the debt and the common equities, which will be relevant for us in valuation at the end of the day. Yep. So this should be the case when we are modernizing. So we are solving all the reusability and so on. So let's create First of all, let's save it again. And then let's create a copy of this one. On layer 6. So this is Ariane 6 reusable scenario. So if they would solve the problem of reusing this legacy rocket, then they would have this situation. But they don't. So let's see the actual worst case scenario that where we have to struggle. So just uploading it for you. Yep. So what happens with a company which doesn't have reusable first stages? Then obviously we will say bye-bye to this part here because our recoverable cost will be 0. So I'm just moving you. Sad moments. Oh, the expenditures are landing here. And we are just saying that, okay, this is not recoverable anymore. These are all the costs. And again, then I have to destroy this one as well. So 10 times, 10 times. Yep. Okay, so why do we have... Oh, yes. No. Why? Ah, okay. That's the reason. So this one remains. Okay, this is still a terrible condition because... Let's go up to the internet and calibrate this well. So Ariane 6... Wikipedia. Luckily, it contains all the necessary information. So cost per launch, the small one, with only 2 solid boosters, what we are ignoring in the case study, is 100 million, and with all the solid rocket boosters, what was flying 2 weeks ago, it's 115 million. So this is still a bit far-fetched. So let's decrease the margin to 10, A, 0.5. Oh, come on. Hmm. 0.5. Oh, it's too big. Okay. Oh, sorry, too small. Close enough. So we can say that, okay, still we have a plentiful margin compared to the manufacturing price. But yeah, in this case, we are in the above category. Also, we can say that still we are using the same hardware, so nothing happens here in the probability of gaining revenue, but obviously first stage landing probability will be 100% because everything will be dropped into the ocean to make all the animals aluminium rich under them. And probability of first stage reusage 0, number of missions, we are going down. So instead of you, we have to use you. So these colors are the same. No reusage. Third stage is to build, the same like here. So okay, this one is cool. Then we have to disturb also the revenues. I realize the same way, so it doesn't matter. Unit cost, manufacturing need for 1, First stage, second stage, yeah, it's... Maybe I should not add them together here. Maybe the laziest way is to keep them separated, just we know that they are not reusable. Yeah. You are here. You are here. Because in this case, this will not mess up my Excel here. Yes. Okay, so we have to manufacture all this stuff. So unfortunately, the gap between expenditures and revenues are a bit closer, especially that we have still wages to pay and depreciation as well. And then we can see that in the last 5th year, we are barely profitable. Financial profit still rubbish, but now I'm not forced to have financial runway. So what happens if I zero this out? Still the company is profitable, so we don't need additional funding. Just we will have mediocrity. Yeah, financial profit is negative. 0. So we can say that the company is profitable at the end of the day. Then this is... Maybe they have 4 good years ahead of them. And then things are going downhill. In real life, what is unfortunately happening that even the European Space Agency started to move high-value launches from Ariane 6 to SpaceX. So even if they are saying that they can get better value and higher reliability. Unfortunately, so there are problems. Yeah. Okay, so let's save this one as well. So right now this scenario is about so this is the original non-reusable scenario where still we can earn some money. Just during the next weeks we can see that the value contribution is terrible in this case. So as we are analyzing it further and further, then these numbers here will be more and more troublesome. Yeah. So let's close down this terrible scenario and then let's build something more interesting. And I have to delete this one. Because now I have to make another scenario. This is for SpaceX. So first of all, what is really hard now that, okay, we have the Falcon 9 product line, which is absolutely reliable, it's efficient and so on. But right now they are also developing Starship. It takes a lot of money away. They have the satellite internet business, which is cool because it's easy to price in. We can see that how customer numbers are changing, increasing, and so on. So we have good data about this. We can do forecasts and so on. The problem is that they acquired XAI 2 weeks ago, which I don't. So I would like to ignore that one because I have no idea how to price in an AI company which is not making any profit, just burns up investors' money. So we will ignore that one. We will still try to create assumptions about Starship, about its flight operations, but at first we should model what we know. So Falcon 9 numbers, we should model satellite internet business, and then when we can solve this today and maybe next week, then we will add also research and development stuff, and hopefully we will have better assumptions to start or possible IPO valuations. So what do we have here? Product. Let's call it product 1, so Falcon 9, because we will have multiple product lines, so that's why. We have, instead of Vulkan, now let's go far away from the Vulkan concept, and let's say that Vanlin 1D. This is highly reliable because if you are checking launch numbers, in this case I can absolutely recommend Wikipedia, because that one is compared to other cases, this one is reliable in this case, because so many nerds are maintaining it that we can say that, okay, this is proper. This is a really simple engine. What we can see here, that this is where oxygen, kerosene is highly refined kerosene is going in. Then in this part they are burning some of it away to roll up a turbine, to move a turbine, and then this moving energy will put all the other, so the useful oxygen and kerosene into the ignition chamber here, and through this this like a water hose. So it has many leaks in it. This is an injector head, and they are before of them they are mixing them together. So in the main part of the rocket engine they have the optimal fuel coverage, and on the side of the engine nozzle this is where they have kerosene rich fuel mixture. So this is why it's not able to burn as efficiently. So that's why temperatures on the side they are way lower, and this is how they are not melting the whole engine to pieces. But this is not efficient because you are losing some of the torque by just generating gas to move this turbine here. So that's why we can see in many cases sine burns here. So this is not generating thrust. This is the efficient part. This is just to maintain the engine itself. So we can say that this is efficient engine because it can throttle down to 60% to land and not to drop into the ground. On the other hand, this is not an efficient engine. And also you have to clean it between every launches, so you have to spend at least a month to clean the injectors, to check the vehicle, to change the heat shield on the bottom of the rocket. So this is faster usable than a space shuttle which had to be rebuilt for a year before launches, but still not that after landing you can relaunch it immediately, because all the disgusting gunk have to be removed from the engine injectors because of inefficient burning. And we have some statistics here from the launch numbers, hopefully 1D. No, we don't. Okay. Then let's go to the Falcon 9 page. Yeah. Just in this case, we can see the launch numbers. Numbers is... No? Yeah, so, right now they were increasing prices. Just the problem is that with a discount you can have the launch proven first stage, so that's why it's cheaper than this, actually. Yeah, so total launches, right now we can see that is 604 and success is 601, but all the full thrust versions, so the final block 5 versions, were successful instead of 1. Okay, so it was a long time ago when they had any failure. Yeah, that was the group. Okay. So that was one Starlink launch when they had issues. So that's all. What we have. And that was one time they were exploding on the pad, but yeah. So we can see, and also reliability in the case of landings. So it's more than 500. So there are no other rockets on the planet which were flying that much, not even in China, and they are flying frequently. So we have to build a beautiful Falcon or Merlin 1D. Obviously, this is called Falcon 9 because on the bottom we have 9 engines, but also it's visible here that we need 10 engines, obviously 1 on the top and 9 on the bottom. Then the price of the engine is so B3, then B5, so I just have to write B instead of C. Because yes, 2 million. I digged up many forums and that was the most reliable number, so it's 2. Also, they are manufacturing it in huge quantities, so it's cheap. Okay, aluminum body has the same price. Doesn't matter. Fueling has been changed because now it's rocket propellant 1, which is kerosene, just a refined version of it. And we don't need this tonnage of fuel because now we are way more heavier with kerosene. And that's why people moved away from kerosene and moved towards natural gas or methane, because in case of methane you are burning 4 hydrogen molecules and 1 coal. Instead of many coals and many hydrogens that is happening in case of kerosene. So yep, still we have to change this unit here. So what is the fuel price? No, propellant, yes. Okay, at this time we can say that is 0.0865 is per tonnage. So otherwise, kerosene is dirt cheap. So we don't have to care about much about fuel. So fueling costs are absolutely negligible. They are rounding errors in this field. Yeah, we are adding them together here, we are adding them together there, and then we have this manufacturing price, then we have the average price, then we have the margin, which is really high, so we have to shrink it down because let's see. Price. Blah, 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 blah. Let's do the path, so let's check. Blah, 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 blah. Russia will cut space launch prices by 30% in response to SpaceX predatory pricing. So right now we just have to say that okay, it's 50 million. Okay. Okay, so let's say that okay, it's 51. So close to realistic. No, this is way too realistic. Bless you. 7. Okay, let's keep it 7. Yeah. So now we can see that okay, the price, the average costs are around the actual state. Still we can have, okay, we have to change the launch number because now we can go for the launch manifest. And actually we can have the pricing. And also we can see that internal costs for a launch was somewhere between 15 million and 28 million. So 28 million, we can see that, okay, this is quite close, but also we can reuse the fairing because this is also their business model. At the beginning, they tried to land it on a ship, which was quite stupid because they were trying to chase parafoil driven fairing half with a ship with a net on the top of it, and after several attempts they avoided it and they realized that it's easier just to fish it out from the sea because it's floating. So fairing have to go to the recoverable cost instead of the lost. It's not a sunken cost anymore, unintended. Okay, so the average is now down. Oh my god, it's so down. So now we can see that are we in between the... Yeah, we are. Okay, so close enough. Just we have to increase the margin in this case because still we have to be... Okay, it's good enough. So 1.1 still creates the... So the fairing is reusable. So reusable this one, reusable that one, reusable that one. Okay. Still we are losing the second stage. There were plans 10 years ago to reuse the second stage, but the energies, the speeds are so high that it would create additional masses, and then the physics was not adding up at all at the end of the day. So they were just saying that, okay, we are losing only one engine and a small part of the vehicle. Still they are fishing out the fairing, but that's all. Yeah. So we have the data about this. So the second stage, which is not reused, is believed to get the largest expense per launch, which means that it's 12 million US dollar to produce. This is definitely less than 12 million US dollar. 2 plus 4.5. Okay, let's ignore this fact here, but not nice. Okay, maybe we later will come back for this one. So just add this one here that with yellow, that this one is absolutely not correct. Otherwise, internal costs are between this one, so at least we are fitting to the average number. So this is green, this is okay. Yeah, but in this case, with workforce expenses, refurbishment, assembly, operations, so everything. So we are way better. Then we have to go up. There is also a separate website for Falcon launch numbers or missions or something like this. Oh, list of all Falcon 9 stage boosters. So there is this group of people who are enjoying to make pictures of trains. Then there is a subcategory within that who are collecting all the identification numbers of locomotives or even carriages sometimes, and they are creating beautiful Excel sheets from it. And there is a third category who are doing the same thing for rocket boosters, which is remarkable at the end of the day. And then we can see all of them on Wikipedia that this is the serial number, so this one is quite oh, they retired it. So this is an early version, but if we are checking the current one, so this is flying 19 times. This is happily serving since 2020 and until 23. It was working at least. This is also from 2020, 2 years ago. Oh, it was exploded. Okay, so I mean it was not reused, just they were saying okay, bye bye to it. 23, 23, 21 was flying last time. Okay, it was not recovered. 22. And then still active in first stages, we can see the 31, this is the oldest. Oh, sorry, 33. When it started its career. Oh, 2021, and still happily flying even yesterday it was flying. So this is what we can see, that this is a long-term asset because it's flying happily. Or there is the other one with a planned launch this week. Other one with 31, which was flying early this month. Yeah, so we can see here that it's way more than 10 launches. So we have to still calibrate that at least. The empirical number, if you are just scrolling through, is higher than 20. Obviously, we should calculate an average on this one, but let's say that 20 launches. What can we do here? Then we can see that E9 yeah. So we have to manufacture the whole rocket and fuel it and launch it once, and then on the next 9 times we just have to manufacture these parts and fuel them. So this is the difference. So now we just have to increase it to 20. So we can say that, oh, we have limits in relaunching the stuff. Let's calibrate with 20, and then we can just modify this number here. So it will be much more transparent what we are doing here. And we can say that empirical data is fluctuating around this number, so it could be 30. If we are really aggressive in case of the pricing, then we can say that, oh, which one is the oldest? 50, 26, 31. Is there anything? 33, 31. Okay, so 33 is the oldest, then we can say, okay, to manufacture this, reuse it 33 times at least, because it was surviving it, so why not? And money. At this point, this is just money. And divided again not by 10, but by this number here. We are still within the internal cost guideline, just we are again cheaper, so unfortunately we have to increase our profit margin. It's so sad that we have to earn more money from the market. Okay, so now the margin is fat enough. What should we do here? We just should increase it to 12 million. It's not elegant. Okay. Then ROID, so explosion. Obviously, now we are just have, instead of C, we are referring to B because this is referred to Merlin. So we have everything in column B, we're referring to Merlin, so that's why. We don't have to care about that one. Also, U. Practically, this is not exploding anymore. So we can just say that, okay, we will kept at 1% and that's all. Because still something can happen, so it would be rude to say that it's 0. Still we can say that it's highly reliable platform. And then first stage landing. Probability. Then this will just go here. Obviously, we can do it better because if we are just checking that, okay, how many times was it landing at all? Block 5, yeah. So success ratio was this number. So officially, if it would be an insurance company, then this is what we are looking for. So how many times it was, bless you, successful. So stage boom boom probability is this ratio here. And 1 minus, sorry, because this is the probability of harming. Okay, so it's less than 1%, it's 0.2%. So we can keep the empirical number here. And then successful landing usability is, I was able to see it somewhere. Unfortunately, the public display of Falcon 9 vehicles are absolutely limited. I can show you what you can see. Because I was able to see, unfortunately, most of them. So you have to go to Florida, to the Kennedy Space Center, and then there are many stuff what is visible, but unfortunately only one rocket or Falcon 9 is visible. This is not even a block 5, this is a block 4, which was flying only 3 times, but that's the business end of it. So with the engines, this is these landing legs which are opening when they are landing. This is only coming from the atmosphere, so this is practically built-in experience. So most of the boosters became completely black after several landings, and this is only the heat shield what you have to change between launches. And these are the grid fins which are maneuvering through the atmospheric part of the re-entry. And this is pointy on the top because that was later modified to become a side booster for a Falcon heavy business, so this is not even a proper one. So I was really happy to get the photograph with it. Just that's all about SpaceX in the whole Kennedy Space Center, which is not much, regardless that the whole space program is built around SpaceX right now. Okay, so that was the landing number. So first stage nut boom boom ratio is 574 from this number of attempts, but most of it was in the early years. Do we have anything about block 5 ratios? We can see the manufacturing number. Just right now this is not interesting for us right now. Okay, then we can keep this probability, so we can see that first stage landing probability is 2% based on all the different versions of the vehicle. So this is absolutely misleading number here. We are conservative, but yeah. Okay, so probability of first stage usage going boom boom, and practically minus. This one is that. So number of missions, yeah, we have to still get the launch manifest, so we have to calibrate it, but otherwise probabilities are proper. So we still have to calibrate these numbers here on the top. Yeah, so we have beautiful graphs also. And we have also data about Starlink, so domestic or internal launches, and commercial ones. Good. What is this? Yeah, that was a mistake. Or yeah, that was lost during flight in 2024. So in this case, we can say that we can also create predictions based on this data. Do we have any table? No. Then we have to do it manually. Okay. So past launch numbers. Let's define do we have only, it would be so good to have only commercial. I don't want to care about government because the number is so low, and obviously the paycheck is way higher, so it's biased, but we don't have any additional data. So let's start in 2022, because in this case we can see that how they are scaling up their, or how they were able to scale up their operations for 4 years, and then we can create predictions or forecasts. At least in this case I can show you that how can we do this. And I have to move the years upwards. So Starlink internal launch numbers. So in 2022 they had 27 commercial launches and Starlink was 34. Then oh, sorry, I was in the wrong year. So 33. Yeah, it goes. No. 33. 63. So that's why it's misleading that if you are just focusing on total launch numbers, then we can see that they are earning much more money, but they are not, because this is highly limited. Then 2024. We are ignoring this one failure because that was related to Starlink, so at the end of the day they are just 43, and then they maxed out Starlink manufacturing. Yeah, so what can happen during the next 5 years ahead? 1, 2, 3, 4, 5. There is always a limiting factor, so let's sum them up. Because they have 3 launch pads, so 2 in Florida and 1 in California, so they are not able to go 3 times 52. So this is the theoretical practical limit for them right now, because they don't want to build more launch pads for Falcon 9 because they are assuming that sooner or later this vehicle will be outdated, so they don't care. But still, this is a hard limit, so they cannot have higher numbers. So after that, we can just extrapolate the data based on this one. Sorry. Until 30. So if you are using data, no. This is forecast. No, this is, first of all, I have to define it that this one is date. Not this way. Maybe not. Yes, okay, it was able. But you should go ahead to 30. So our launch number should be somewhere between 44 and 57. So again, what we have to do is just we have to highlight the years, we have to highlight the raw data, and after that we just have to say check data, forecast sheet, and then suddenly we can just set up that, okay, this 2030 will be the end of the forecast, and then it will create this otherwise completely rubbish forecast trend line, which is linear at the end of the day. So it doesn't do much, but at least it's an educated guess for us. So just utilize it and copy and paste. Copy, paste, transpose. Copy, paste, transpose, and value. Transpose, value. And then we have the data, and obviously this should be round numbers, so 50, 68. Let's round somewhere. Okay. Then we have to do the same thing for Starling. So data, forecast sheet. No, you are not happy. Okay, then data, forecast sheet. Then only this one. Oh, come on. Now it's happy. Okay, then until 30. This is yes, the number of worksheets are increasing exponentially, but transpose, value, copy and paste, and then we could do round up, round down, and so on functions, but so, oh my god, you're not able to do this. Okay, so let's do some reality check, because right now I'm way above the potential. Here we were already above potential. How did they do that? They had bigger turnaround. Okay, then let's say that virtually we have 4. They are not sleeping, or I don't know. Still within limit. Now we are not within limit. So we have to say that this is not the forecasted level anymore. This one, then okay, it's still within limits. Then prim. Okay, so this is the best what they can have. So even if they have faster turnaround, so they have practically 4 launch pads, because virtually they can prepare rockets and so on within a week, within 3 days, which is somehow happened last year already. Then we can see that this is the best what they can have. So launch numbers. Maybe we should not have this table at all, because in case of the profit and loss statement, we have to distinguish between internal launches, because this is just generating expenditure, and external launches, which is generating also revenues. So this is where we are stopping here today, and then next week we have to distinguish between internal and external number. So something like this must be done. Yeah.